Hi everyone and welcome to the weekly update with me, Richard Perry, market analyst at Handtech Markets. Each week I'll take you through the key events that I believe will be driving your investments in the coming days. And moving into the new week, this non-farm payrolls report that we saw on Friday continues to drive these sentiments, certainly in the Forex markets, and just holds back these equity markets slightly. The payrolls report on Friday was a little bit disappointing, but not too bad. It slightly missed expectations. But it was the 9th month in a row of payrolls above 200,000 after a revised higher reading for August, and that is a significant development. That is the first time that that's been seen since I think 1990s. So a significant strength of this payrolls report that we've seen on an aggregate basis through 2014. Now, the real significance of the report, I suppose, would be seen through the average earnings growth, which is just slightly pulling higher. It's on an aggregate basis across the year, it's around about 1.9%, which is just above inflation actually in the States. So you're beginning to see a little bit of real wage growth coming through in the States. Now, the big thing, I suppose, this week is the fact that there isn't any real US economic data to really focus on, so we're looking more towards now the Bank of England quarterly inflation report, which would certainly have an impact on cable, and also the European growth data and the inflation data at the end of the week. Now, this Bank of England quarterly inflation report is important because, as I said once again, with this the outlook for inflation and subsequently wages growth, which also actually is announced just before the quarterly inflation report as well, as part of the unemployment data for the UK. Wage growth is seen as a very important element to the potential tightening cycle in both the US and the UK. So how the Bank of England sees the wage growth in the UK is very key to that potential hike tightening. So and then on to the Eurozone growth data. Well, certainly Eurozone growth has been a key driver, or lack of Eurozone growth has been a key factor in weakness in stock markets in months gone by. That recovery that we've seen in recent weeks has certainly been sort of not really on the back of any sort of improvement in the Eurozone, but certainly the inflation data just started to pick up, and there are signs that potentially that the growth data also might be ready to start picking up as well, or certainly bottoming out in the Eurozone. So maybe this focus on flat growth to maybe just slightly higher will be very interesting, whether this with the Eurozone actually does dip back into negative growth on Friday. So how does this all affect the in the Forex markets? Well, certainly euro dollar has been under pressure. It dropped below that $1.25 level last week, and I think that was a key move. It still remains under pressure despite the fact that it's had a bit of a jump to the upside following on from that payrolls report, but I still see that it's under pressure. Anything between $1.25, $1.26, I still see as a bit of a selling opportunity. I think euro dollar has certainly got further room to maneuver to the downside, and I think a test of that July 2012 low at $1.2040 will subsequently be seen in due course. Now, in terms of cable, again, quite a similar story we've got going on here. We saw the loss of the key support last week around $1.5870. We actually saw also a loss of a move to a new 12-month low on cable as well. So the rebound that we've seen today on Monday just takes cable up into that $1.59, maybe towards that $1.60 area, but I see that $1.60 as still acting as the ceiling, as it did pretty much throughout all of last week. And I see that anything back into that 100 pip band would be a chance to sell, because I think, again, it's going to be seen as further weakness in due course. Now, dollar yen is a bit of a different story. It's had a strong run higher, and it's just begun to come a little bit off the top. Maybe a little bout of consolidation. The support comes in around that that 113 mark, and I think that on a near to medium term basis, that 113 mark is key for just holding on to this bullish outlook and making sure that the corrective outlook doesn't creep in. But at the moment, dollar yen is still holding on. So on to these equity markets. Well, the S&P 500, a strong move to the upside, saw a break into new all-time high ground again. Although Friday was a little bit stayed, a little bit just neutral on the back of that payrolls report that didn't really shoot the lights out. So maybe the prospect of a bit of a correction coming in, and possibly how this S&P 500 reacts to a first correction will be key. I think that you've got a band of support now between 1980 up towards 2010, and I think how the S&P reacts in that band of support could be crucial for these markets in the coming weeks. Now the DAX again actually has been continuing this recovery higher, series of higher lows in place, and it continues to pull on. But the momentum indicators are just beginning to sort of waver a little bit, maybe beginning to sort of plateau off, and maybe that could suggest signs of a little bit of maturity within this recovery. But certainly, whilst the reaction low at 9,149 remains in place, I think that the DAX remains okay. Similar sort of story on the FTSE. We've got the FTSE 100 again pulling higher, series of higher lows, and the equivalent low on the FTSE 100 is 6,445. Now for gold, as I said, the strength of this dollar recently, huge downside that we saw on gold, but there was a big recovery that we saw on Friday. Now that recovery theoretically was a bullish key one-day reversal, which potentially should sort of change the attitude around gold, maybe bringing the bulls back to the table. But I think the reaction today, tomorrow, in the early part of this week is key. I think that the bulls need to continue to pull this one high. It needs to pull back above the 1180. That 1180 was the crucial old floor. That support was broken. That now becomes the new resistance. And I think that how this gold price reacts around that $1,180 mark is key for the medium term, because if it fails to move above it, I think the selling pressure will tell once again. We'll see another retest of that 1131.85 low that we had last week. So how are we looking out for economic announcement this week? Well, as I said, not a great deal of US data this week, but we've got tomorrow, tomorrow is Veterans Day, so again, the US is on holiday. But then on into Wednesday, we've got the UK unemployment, as I said earlier, and the quarterly inflation report for the Bank of England. So very much UK-centric focus on Wednesday. Then into Thursday, we've got the Chinese industrial production and the weekly jobless claims for the States. And then on Friday is the Eurozone is the big focus with the GDP and the final inflation data. And then into the afternoon, we've got a little bit of US data with the retail sales and the Michigan sentiment. So quite a lot going on, but not too much surrounding the US. But we'll see how the Eurozone and the UK and also China does as well. So that's the outlook for this week. I wish you good luck in your trading, and I'll speak to you next week. Thank you.